All right. And pretty slow overnight. Haven't really moved much. We've been chopping around most of the day, or most of the overnight, with not really a lot in the news cycle to move things one way or the other either. So it's been relatively quiet. Volatility continues to collapse. I'm not going to say it's collapsing. It's contracting at a pretty decent clip. The VIX is actually under 17. This is lagged because I don't have a data feed set up to this. I am going to log in real quick. For whatever reason, it always, I don't know, randomly just logs you out all the time. It is a little annoying. I don't know if anybody else has that issue. But I have to say, quite personally, I'm kind of starting to understand why Tasty Trade gets such shitty reviews on TradingView, because they actually say that they're supposed to be able to do all these things, and quite honestly, it's just not there yet, even though it is integrated with TradingView, and it is a really good stock package. I mean, option trading platform. They really haven't come up to speed with doing futures and bracket orders and having a DOM and all that. It's really a long way off. And I don't know if anybody's actually used it before, but their DOM is kind of garbage. It's bad. If you use this Active 2, it's pretty bad. I've tried using it. It's slow and clunky, and there's times when I've actually done some trades in there and they don't show up. So I'll put a position on and then they're not even showing up in here. They're not even showing up on this screen. Yeah, it's so I've not been happy with it at all. So hopefully they make adjustments to it, make it better. What they should really do is they should make this pane, this Active 2 pane, they should make it detachable, so that you can actually detach it away from the main program, like a separate window, and have it be on its own. And I think it would actually work a lot nicer. But you can see even here, it just went to adjust price, and then the DOM just like blipped, moved, and it's pretty bad. Anyway, I don't want to have this be a bash Tasty Trade, but I was wondering why they had such bad ratings on, it's a 4.1, but and then going and looking, everyone has some pretty viable complaints. So if you're going to trade futures and do, if all you're going to do is trade futures and whatnot, don't use Tasty Trade. It is an options trading package, and that's really about it. The charts suck in it. But the options, doing options in there are, I think I love doing them in there because I love the visuals, even for myself. And I love the analysis that is available. But as far as, trading on that platform, good luck. I found actually Thinkorswim is better for even trading, even day trading, than not futures, but stocks. Anyway, look at some levels here on the ES. We already took out R1 already, so that one's off the table. Let's blow up the screen here. Right, always looking at the 1 hour. That's just what we do when we do this kind of analysis, especially for pivots. You don't want the time frames to be too short, right? You want a little bit longer time frame when you're looking at pivots. We still have a couple of things marked out. Yesterday's little bit of a blip up kind of took out a lot of our upward targets that we had. I would say today, if you're looking for a spot, 68.8525, which is an R2. 68.8525. That is a good area. And that's an S2 on 12.04. 25. Okay. So that looks like a pretty good spot. Looking back, if we actually pull this back, there was a lot of there's a lot of activity there. We also have another marking at 89.94. As far as R3 today, 96.0675. That's a good spot too. I mean, I don't know if I don't think we get there today. We do seem to be chopping around quite a bit, but it doesn't appear that we're going to get there. But anyway, we're going to mark that. That seems like a pretty good spot as well. And I'm also going to mark, just for engagement purposes, we have this spot here that, if you go even back to beginning on Sunday night, just interesting area kind of developing here. Should actually be the other way. Interesting area developing here, I think, is that you see where we kind of hit some resistance. We backed off. We came back up into this area. We backed off, and then we had a really rough time getting through here. But then we finally got through here, and things kind of got exhausted. And the reason I'm putting this on here is, again, just for engagement, that it's a good possibility that if we continue to chop here and we don't, garner any momentum, and I want to make this like a gray, and we don't garner any momentum to break out of here, it's likely that we lose any kind of velocity and kind of back off here. And so, and I think this is a good area I'm going to put in an alert here on the pivot, which is 68.50.75 or so. Oh, God, what is that? Buy. I didn't buy. 68.58.75. Okay. And if we break that, there's a very good likelihood that we kind of take out S1, which is 68.29.50, and I do like that area today. and as well S2. So a lot of pivots in between here. Now on the outskirts on this side, I probably wouldn't touch S3. I would definitely do an S2 trade if we get down there. I'm going to mark that one off too. But we do have a couple other marks here from previously as well, 68.0750. But I'd likely not take this trade because we do have this. I have this support line that I drew a while back, and I'm gonna zoom out real quick and refresh and zoom out. And I have this area marked here. It's kind of a pretty key support area, in my opinion, given where we've been and where we've come from and where we're at in the market here. As you can see, we have really, since about Wednesday, November 26th, we have literally been range bound and we have chopped in this area. Now, it's a slight trend higher. But if we get down near here, 67.95, and we are not able to hold that, it could get ugly. Again, I'm not saying like, oh, it's going to be a crash. I'm not one of those people. It's not going to be a crash. But we could be in for a little bit of a whooping there. I could see if we lose that, we can literally get through there pretty fast and quickly get down to the 69.90 area pretty quick. So, with that being said, I'm not marking that because I'd likely not take that trade unless I really see a ton of buyers come in there at that time. So, but I already have an alert set down there. You can see here that shows up, which is back on 11/29, 67.91.50. That's why it's really important to put these alerts in and then put context, right? Put some context in why you're putting them there, and so you know. All right, and that's about it on the ES. There's really not a lot of. There's some econ coming out. I think there's like some kind of challenger job cuts, and that already came out, I guess. Or yeah, that just came out. I don't think that's gonna move in. I mean, there's claims. I don't think those are even going to really move anything, just my opinion. Factory orders, I don't think that's going to really have an impact. Natural gas, some auctions, and then we have a Fed speaker like in the afternoon there, right? Bowman, balance sheet, and then again, there's not anything on here, in my opinion, that's really going to be anything. I don't think there's going to be any there no matter what happens with, I think there'll be a lot of talking heads that'll try and make it seem like some of these are important, but I don't think any of them are really going to be of any consequence or move the markets here. So anyway, there's the ES. Let's move over to the Russell. Story of the day actually is the Russell. The Russell actually had a really, really strong day yesterday. It was the best performer in all the markets. And the leaders in that group were all the banks, which tells me one of two things. Either, one, they're all positioning themselves for interest rate cuts. And, more demand for loans because of. So, anyway, the Russell had a really, really nice day. We broke out of this little line here, which we don't even need anymore, so I'm going to get rid of that. But we still have S2, which is a pretty good spot here. It is kind of a ways away, which is 24.68. We got a pivot of 24.99. I would actually use that as a support mechanism today, given the move yesterday, 24.99.50. 1250 or so. All right, use that as a support mechanism. We're about 12 handles up from there, and if we do back down to that today, it may be a pretty good area to take a quick hitter. As far as the upside, I don't know. I mean, seeing the price action yesterday in this, and the Russell normally doesn't have like consecutive like booming days. It's not like the NASDAQ or the ES, and it's simply because it's a broader index, so it needs a bigger and broader amount of stocks to be up or down to really move it, and it tends to not have those consecutive days of like really moving. So anyway, with that being said, I kind of like this area, even though we've already taken it out. I kind of like 25.1780 today for a short, and that is R1 25.1780, and we already just breached it a little while ago overnight, but I still like it given how the market's trading right now. It might be a nice spot to short on the open if we're not up there yet and we get some buying coming in. And R2 looks very, very nice for a trade. We kind of have an area here where when it broke down last time is kind of a swing high. Also have a high volume node here. So you kind of have a lot of things going on here with this. So I kind of like that area as well. So we're going to mark that one. As far as the downside, I do like 24.9950. Also like 24.80. But the one thing I would say about 24.80 would be it all depends on how we get there. If we get down there with some speed, that one, it could slip through there pretty quick. And so that's it. I wouldn't take R3. I wouldn't take R3. I wouldn't take S3. So kind of sticking in the middle and looking for a range-bound day. All right, and then let's go to the NASDAQ, because I said I was going to start doing NASDAQ, and I'm going to start doing NASDAQ. All right. Let's pull this down and then let's widen this. Okay. So as far as the NASDAQ, we're kind of getting back. Let's look. I'm going to look out a little bit. I'm going to go to a 4-hour and I'm going to look out. And we're kind of getting back into some areas where, again, right, you look back, here's our all-time highs. And we're starting to get back into these areas where we kind of had gotten to just a couple weeks ago on the downside. And so does this market have enough mojo to continue and, eventually press and maybe break new highs, right? No one knows. If you were to listen to everybody out on social media, which makes me say that there's a lot more legs left in this, is that they're all saying that, the AI bubble and blah, blah, and now everybody's a finance expert. You notice that, right? On, whether it's the news or it's social media, everybody's a science expert. Everybody's an expert in NVIDIA. Everyone's an expert in AI. Everybody knows it's a bubble because, it's 7, big news story now is that, it's 7 companies transferring all this money back and forth. Welcome to the party. What do you think has been going on the last 20 fucking years, right? That shit's been going on forever. It's always gone on. What, just so happens now that you're able to put it in a fucking graph and put it in some fucking fancy picture and publish an article on the internet? oh, wow, gee, you're a fucking G. What do you think has been going on? It's been the same fucking shit going on for fucking ever. It's always been the 10 or 15 companies pushing money back and forth. Backed by who? The government, of course. So welcome to the party. But anyway, with all that being said, and many of these stocks in the NASDAQ, I think there's more legs here for this thing to run. Now, I don't know how ferocious. I don't think it's going to be as ferocious as it was to the upside that we just experienced. But I do think there's more legs here left, and it's only because I think there's so many people beating the table now on how this is overvalued and it's this, and like every other news story now is, oh, Michael Burry, Michael Burry bought like $9 million worth of puts that, if it works out, his notional value is in the billions, right? If those puts, so basically what he did is he bought out of the money puts. And I think he bought leaps out of the money. But their notional value, if they turn out, is somewhere near billions of dollars. But the reality is $9 million is like less than, I don't even think it's 1% of his total holdings. And so like he's doing what like every other hedge fund and everybody, they're hedging themselves, but for some reason he managed to make headlines because it's Michael Burry, right? So I mean, anyway. So with that being said, I still think that there's some legs here left. How much, I don't know. I don't think you're going to see it the veracity that we've seen in the past, but I do think that we do have, quite a decent amount of potential to at least touch these all-time highs in the NASDAQ, and maybe even break them. But without, with saying that, knowing full well that if and when that does happen, it's likely that there's going to be a pretty decent pullback. Let's face it, it's going to happen again. So anyway, with that being said, I do like some of these spots down here, like 25,487 for a possible buy down here. So 25,485.75, which is S1. Also like S2 and S3. And the reason is we have a volume hole here. We have a big high volume node that goes all the way down, almost all the way to 2,400. So a lot of volume in here. So, again, there's a lot of interest. And again, these aren't trades you're going to bequeath to your kids. You're going to buy these on a bounce and look to make your 20 to 30, maybe 40 blips and get the hell out of the way. That's what the way these trades work, especially in the NASDAQ. So I specifically, I really like those areas. Now, as far as the upside and shorting, I don't know. I have a problem. I'm just going to zoom out a little bit. I have a problem shorting this. I have a problem shorting this up here. I mean, the only spot that I marked it last night was up here at 25,880, which is just above R3, which is 25. R3 is 25,851. And just above that, I have marked 25,880, which is basically this area here. Right, this area here, and kind of this area, which is kind of around R3. But I like that spot for a possible short if and when that gets there. But otherwise, if we get momentum to the upside in a NASDAQ, I'm likely not going to stand in its way and think it's going to pull back. Not at this time. So anyway, that's kind of my thing on the NASDAQ. And if we do blow below S3, it can get really, really dicey from there. So I would not really, I guess I would. Now that I look at it, that's really not a bad spot. So it's 25,322.50. But this is one of those where 25,322.50, this is one of those where how it gets there is really the issue. If we get there fast and furious, it won't stand in the way. We get down there kind of in a methodical, slow trading maybe day, light volume here in December, yeah, it'd probably be a good buy down there. All right, and so that's it on the NASDAQ. All right, change gears a little bit. Just look at Bitcoin just for a little bit. It is backing off a little bit today. It has come back. I'm still in the camp that I think there's going to be more. I think there's going to be more downside in this going forward than upside. Come at me if you want to, but that's just my feeling. This rally that we just had in all of crypto just doesn't feel organic. To me, it doesn't feel organic at all. I think a lot of it may have been, covering and or even a lot of these funds at the end of the month having to reposition, right? Because there's a lot of funds out there too that I think people don't even understand what they are. They don't actually buy Bitcoin. They buy like Bitcoin futures, or they may buy like Bitcoin derivatives of some kind, but they don't have and don't consume physical Bitcoin like MSTR does. So just be aware of that. And I think with that being said, that adds a lot of volatility to Bitcoin in general, because you have all this other kind of nuttiness going on underneath the covers, especially in a lot of these ETFs that are out there that I don't even think people are even aware of what they do. Now, what I do with any ETF is I always go and look at who the company is, how long they've been doing it, whatever the ETF, how long has it been around. I don't really care who's managing it, because even if they say someone's managing it, it's not them. It's their team. And it really doesn't matter. Honestly, it doesn't matter who the person is. It's because they have to trade it on an ETF on a strategy. So it really doesn't matter if who's ever doing it. So anyway, that, and then I also look at what the hell did I have inside? And so that's important, especially with these Bitcoin ETFs, because there's quite a number of them that actually don't hold physical Bitcoin. So just be aware of that. Anyway, I think there needs to be a lot more unwinding inside that space before Bitcoin gets any real, and it's all the cryptos, before they get their traction again for maybe the next leg up, if there is one. I don't know if there is, but that's kind of my take on it. So a number of things yesterday. There was quite a number of movers yesterday, and we'll bring those up. We had Tesla actually making a break yesterday, being up 1750. I don't think there was any news or anything, or maybe there was. I didn't really pay attention. But I didn't really pay any attention to like the news. I was like, oh, wow. If you look here, Tesla has been on a really, really nice run since May. And then I marked this out. I also marked this out. This is actually the all-time highs, which is 487, 489. And also short term, we've been having some issues getting through 474, 475 and change. And so I had marked that one out as well. Tesla right now is not really easy to trade. Volatility in here is almost non-existent. So if we were to actually look at Tesla, volatility in here is non-existent. You can see it's an 8.1, and so you really can't do anything in here other than get directional. And then looking at this chart, For me, I don't know. I mean, to me, it's kind of like off the table. Like I can't really trade it here because I really not going to want to get short around here. If we get up over 475, I would definitely consider taking a short-term short there. Yeah, absolutely. Now, I don't think, don't get me wrong, I don't think Tesla's going to crash like everybody's saying it is and this, that, and the other thing. But I think it's good positional place to take a short, looking for it to possibly even, and putting yourself in a position where if it kind of keeps going and it does hit and break your all-time highs, there's likely going to be a significant pullback, right? What usually happens after something hits its all-time highs? It usually pulls back. So anyway, I would be willing to take a short up there. And the way you're going to have to do it is you're going to need to buy options. You're really not going to be able to sell anything unless everything being equal today. I mean, I don't know when that's going to happen. I don't know. But by the time maybe this, gets up to 475, maybe the volatility's, up near 40 or 50. But for now, it's not even existent in there. And it's very difficult to trade. If I were going to be doing anything, I'd be definitely looking at March. And again, I'm not doing this trade right now. And likely when we do breach that 475, I'd probably be looking at something in this area here, either the 500 or the 490, maybe the 480, but somewhere in that spot. Somewhere in this area here, from 500 to about 470, to do a put spread. And I wouldn't do just a put spread. I would likely do like a calendar. So I would buy March, sell February type of thing. All right, and so that's really it in Tesla, and we mark that one up. MSTR, and I want to talk about this one. This looks like an absolute piece of absolute dog shit. I mean, this chart looks awful. It looks god-awful. This is nothing more, this company in general, and this stock, is nothing more than just smoking hopium. The entire time, because I look at this chart, and if this was anything else, if this was Tesla's chart, you would have the technical community beating the table on this, saying just how horrible this is. This stock is going nowhere. This is right. I mean, if this was any other company, any other. And I would say bigger company, one of the top 10, right? If it was one of those top 10, Tesla, Amazon, that looked like this, you would literally see on the news every freaking day about what a scam this is. I'm telling you, it's like, and it blows my mind that like they just let this go. This looks absolutely horrific. From a chart, and if you just took out, that's what I'm saying, what if you just took out the name? Right? Just hide the name and put it up there. And then you would ask a bunch of technicians, they'd be like, holy shit, this looks fucking terrible. This looks awful. But then the minute you say, oh, it's MSTR, it's like, oh, no, it's okay because it's Bitcoin. It's like, okay, yeah, all right. So, with that being said in there, I look at that chart and I just say, you know what? Let me take a look at this. I mean, a 38 IV rank really doesn't put me in play to say, hey, look, I want to, I'm going to sell calls. And I think selling calls in here would be, I don't think you're really going to get the margin to sell calls, right? You're going to have to do something risk-defined. But I actually, really like doing a put spread in here. And what I'm going to do is I'm likely going to put on a little calendar spread. We're trading at 187.60. I'm going to look at the 190. The 190 is 27.65. So I'm going to buy February, and I'm going to sell Jan. And I'm going to sell the 185. Now, the reason I'm doing that is I'm pretty much selling a little bit of short-term volatility in January. All right. Now, the issue with this overall, and which is kind of suck, is that, again, I'm using, like, I don't want to do a trade in here that's $900, but technically speaking, this trade is a better positional trade, in my opinion, for this, but doing a calendar spread, because if this trade goes against me, I can always roll this. I have the opportunity to roll this into Feb if I want to. I can roll it down and I can roll it up. So I have a lot more flexibility in here. I can also do the full-blown calendar spread, but the problem with the full-blown calendar spread is it puts me delta positive, and I don't really want to be there. And the reason is because the volatility is still relatively high in February, based, as opposed to March. And so the February options are actually a little more expensive. And I can't do it the other way around because then it would be considered an uncovered trade. So anyway, with that being said, I'm kind of like thinking out loud here. I'm going to have to do just a regular put spread. And the put spread that I would do would probably be like a 190, 185, right? I'm only spending $200. I'm playing this to the downside and going out and saying, hey, look, I could lose, but so what? If I lose, I'm going to lose $250. I pretty much have a 50-50 shot here. But to me, I think I'm kind of playing it right. And then I only have 43 days for this thing to basically drop below 185. If it drops below 185, this will come in, it'll have some more intrinsic value, and then quite possibly, be able to make a quick profit in it. So anyway, there's my trade for MSTR. Short, right? It gets me about 4 deltas, and I pretty much have a 50-50 shot in this one, folks. Right? 56%. I get about 4 negative deltas, and I'm not using much capital at all, $250. But like I said, the trade that I would prefer to do would be the calendar spread, the diagonal to be technically precise on what kind of trade. It's a put diagonal calendar spread. That's the one I would prefer to do, but I just don't feel confident in using $1,000 of buying power to be short in MSTR right now, because I'm really not certain that 43 days is really enough for me. So now maybe as a second trade, if this kind of meanders here or even goes down a little bit, a couple weeks from now, maybe I do decide to say, you know what, this does look like it's ready to fall apart. And, but I don't think it's ready to fall apart yet, but I want to be involved before it happens because I don't know when it's going to happen. And I don't think it's going to fall apart, but I definitely think it's going to have a little bit more pressure to the downside. So anyway, there you have it. MSTR, 190, 185. I'm going to try and do it for 250. And I'm just going to send that off. And we're going to do it in IRA. I'm going to do my IRA. IRA. Okay, I put it in because I just don't want to forget. So there's MSTR. So I'm going down the list here because I did mark up. Another one is Oracle, and I'm going to stick by my thesis that I made about 2-3 weeks ago. I still think you can sell puts in here. And I had originally said 210, and I'm going to stick to that. I still think you can sell puts in here at 210 and be okay. I think the secret is, though, is you're not going to be able to do short-term stuff. You're going to need to go out. Volatility in here is still elevated at 84. Even out on the curve. Now, it's really elevated in December at 81, but you're still in the 50s out in those back months, March. I really like March a lot. Here for an expiry, and full disclosure, I'm already in a 210 put spread. But you can bring in $23 here. You're not going to be able to do these on margin because the margins in Oracle, I think, suck. Let me see. I'm going to have to, let's see. I'll get in my margin account. Yeah, the margins in here stink. So you're not going to be able to just sell a put. I mean, unless you want to put up that kind of capital, by all means, go ahead. But you're still going to need to do a spread. And I like the 10 wides. And so you could sell a 210, 190 here, bring in $90, use about 1,000. So you're using 90. You're basically, and you're at a 50-50 shot, but you have time here for this one to kind of burn out and for Oracle to kind of maybe find its legs going forward. But, these are the trades that I like in Oracle. But again, you have to go out in time. I wouldn't do a trade like this in January. I would definitely give yourself some time, especially if you're going to sell in the money puts. Give yourself a little time. If you're going to do something in January, which isn't a bad play either, go down the curve and go down to about a 170. The reason why I say go down to a 170, you're going down to this area here is 186, right? And that looks like a pretty good spot where it found its legs. And if you do that and you go out to January, you could feasibly sell even like a 180, 170 and bring in a little premium. I got too much there. A 180, 170. Bring yourself in $200, right? You're going to use $700 worth of capital. You're going to be positive about 6 deltas, but a 74% probability of profit. And then from looking at the chart, you're in a spot where there's a decent amount of support. And you only have 43 days on this one, so you're getting a little bit of theta on this one to burn out. So there's another trade. So if you want to do something short term, I would go there. So, there's a couple of trades for you. Now, I would do these trades, but I'm kind of knee deep in Oracle. I have a little too much as it is, but just going through the charts here and finding trades. Palantir, I wouldn't touch this. I put this up here last night. This thing, after it kind of fell back here and then fell back again, this trend is hard and fast. I mean, and it looks strong. It looks strong. I mean, from a technical point of view, that looks like a powerhouse. And so I wouldn't touch it, though. I wouldn't get long. I wouldn't get short. I'm already long. I'm already net long, but I just don't think it's the place yet. And I think volatility in here is pretty much gone. PLTR, I think it's gone. Yeah, a 5, you're not doing anything. And you can see I already have stuff in August and December. I think if you do anything in this stock, go out in time, right? Go out to August, go out to December, even go out to January 27 if you're going to do anything in there. Give yourself some time in there for that one to work out. So there's Palantir. Then I'm going to talk a little bit about CRM. This one, we did do the Iron Condor for earnings, and it looks like it's coming in perfectly, right? I thought I was going to be in trouble last night when they came out. They spiked to 260, but right now it's trading at 242, which is right in the wheelhouse of where it needed to be. It's literally smack in the middle. I'm short 250 calls, and I'm short 220 puts. So you couldn't ask for a better spot for this one today. It fell right in there, and I don't really have anything to say about CRM. I honestly think this is a company that's in a little bit of in trouble. I don't mean that it's going to go out of business or anything like that, but I just think it's in trouble. And it looks very Intel. It looks very Intel Cisco-ish from back in the 2000 times, where it just doesn't seem to be able to do enough to move the stock to any kind of significance. They've had a rough year. It has not done well this year at all. And we'll see, but I just don't see any there on this. And in fact, I think if I was going to take a position in this, I would likely use this as an opportunity to short. But I don't know. I just rather stay away from it. And so last but not least, I want to put this up there, and this kind of hurts a little bit. Netflix, I'm in some long positions, but I kind of think I'm on the wrong side of this trade. To be honest, I think Netflix has a good possibility of backing down to 97, if not $90. This chart looks pretty bad. And it does look like it is in a pretty decent reversal. And so what I was looking to do is, since I already have some stuff in Netflix, I was actually looking to possibly hedge my positions here and possibly take on a quick short. And the short that I liked was the 195 calendar spread. All right, so it's the 195 calendar spread. I have to buy puts here, folks, because the IV rank stinks. 22 doesn't really do it for me. And this is what I'm looking at. So I'm looking to put this one on. I know we're actually in a good spot today because it is up a little bit, but I think Netflix is going to have a little bit more pressure to the downside here than it does to the upside. There's a lot of things brewing in Netflix. They're looking to buy. I forgot who it is. One of those. I can't even. It's on the tip of my tongue. But anyway, I just think there's going to be a little more downside, and so that's what I'm looking to do. After that, there's no earnings, and that's about the size of it. So have a good one, and I will be back.